money is actually an ancient social institution. It arises from old practices of essentially keeping accounts of who owes what to whom, keeping accounts of debt, etc. So that's the first thing one should say.
Money is what you have in the bank. It's not only physical currency, it's demand deposits. It's bank credit. Banks create credit and banks create money. And what do they create money for? Well, they create it electronically. You go into a bank, you say you want a loan to buy a house. The bank creates a bank deposit in your name. In exchange, the bank has a liability. You sign a note saying, I promise to pay the bank and I pledge my house as collateral, and anything else the bank can grab in case I can't pay the loan. So bank credit is money. The money that's been created has gone hand in hand with a huge expansion of debt. And the problem with this is that the debts grow faster than the economy. The rate of interest for the last 100 years has been higher than the rate of economic growth. All money is debt. The dollar bills in your pocket are technically on the liability side of the U.S. Treasury. And if the U.S. Treasury would get out of debt, it would have to redeem all the money, presumably for gold or something else. And there wouldn't be any money, but there wouldn't be any debt.
The second thing is that money is necessarily national. This is often explained by saying that all money requires a state which will not only issue it, but will also accept it in the payment of taxes. And that's what gives money its currency. But I think this is not the only thing. In fact, most economies are objectively national. I mean, take, just a simple example of Canada, which is a tenth of the size of the United States, sitting right next to the United States. But the Canadian economy is distinct from the American economy. Just to give you one little example, the 2008 meltdown didn't happen in Canada, even though in so many other ways the economies are so interconnected. So there are more reasons. There are national economies. On the whole, bulk of the economic transactions within an economy take place within national economies. The fact of the matter is that capitalism itself tends to create not, a single world empire, no matter how strong the United States is. It necessarily creates a world of competing national states. If they are all capitalists, the attempt to impose a national currency on the world is bound to be extremely unstable, volatile, and contradictory.